Welcome to Tradier's Rundown. I am Jim Muriel. That's Bob Iacino. Together, we are the hosts of the critically acclaimed Tradier's The Trader's Edge, which has recently been called Smart and Irreverent. And the two hosts are very insightful. Someone really said that, and it wasn't my mom.
It's actually true.
She's passed away, right? So how are you, Bobby?
True. The weird thing about it is a very smart guy said that.
Yeah, very smart guy said that.
Which means it is absolutely true.
It has to be true. So smart and irreverent. Here we go. We're talking about gold today. So gold, even when the stocks were cratering and many commodities were getting hit, gold stayed near the top of the range. Gold's still near 2,500. What do you think is the driving force of gold?
So I think it's two things. To me, there's three major positions for gold. A position meaning by the position you could take in reference to gold. Either you think inflation is coming off, and therefore the Fed rate cuts aren't really going to do that much to the dollar overall. I think that's the least likely. In that case, gold should be a lot lower. But the other two are that the Fed is going to go on an aggressive rate cut cycle, even if it's 25 basis points at a time. The dollar is going to weaken. In that case, the gold should go high. Gold should go higher, and inflation continues to wane. But gold should still go higher. It might stabilize and grind higher. There's a third scenario I think is more possible than the first one I mentioned, which is that inflation ramps up again as the economy slows and the Fed goes into a rather aggressive rate cut cycle. And that to me is gold to 3,000.
Yeah, I think so too. So I'm going to give you my thesis of gold and you tell me what you think. And by the way, since you moved from Chicago, we say scenario in Chicago, not scenario. We're not fancy like you.
I've spent years trying to trying to create my non-regional diction.
Okay.
So if I get a couple of drinks in me, you hear a bunch of D's and do's and trees and four.
Go back to true Chicago.
It just goes all right back to it.
Okay.
But so I've worked on getting rid of that.
Good. And here's the thesis that don't think you mentioned. Okay. So here's what I believe is that prior to 2.5 years ago, gold traded in a band from about 1,800 to 2,000. It seemed like it was in there for a long time.
Yeah.
Gold didn't necessarily rally. The dollar that it's priced in all of a sudden was worth 70% of what it was before. So that should naturally make the band that gold trades in from 2,200 to 2,500. And again, I am thumbnailing this completely. Sure. So that reflects that. And now we're at 2,500. We're just below it right now. I think there's another element, and I don't believe in the de-dollarization theory. I believe Brent Johnson is correct and that it's not going to happen. But enough people are talking about it, and enough countries are making half-hearted efforts to stockpile gold instead of dollars, and that's only beginning to be reflected in it. So I think if that accelerates too, I think we could push through that 25 and low. And as soon as we settle above 2,500, I believe 2,800 is the near to medium term target. And I think that that's being very conservative. Do you agree with that?
Yeah, we agree. One of the things I want to say about de-dollarization is, to me, it's kind of like being an atheist. Your risk is that you're wrong. So, if you're an atheist and God is there, he or she is going to be pretty pissed off at you for being an atheist. So you might as well believe. I keep an eye on de-dollarization, as I know you do as well. But I also agree with Brent that you and I aren't really going to see it in any sort of large way, in a way that affects our lives. I'll throw something else out there. There's a couple of other precious metals that we don't talk about much. It's platinum and palladium, and they're represented in the rundown this week too. And one of the things I want to say is that I don't like platinum right now. I don't like the chart. I don't like the case for it. I like palladium. I like the chart and I love the case for it. Palladium's very much in the electrification scenario. Big deal in terms of solar, in terms of electric vehicles, and the chart's starting to look good. And palladium also exists in a constant supply shortage. It's just the way it is. They only mine somewhere in the range of 2,000 or 3,000 tons a year of it. There just isn't much of it. So it's one of those rare earth metals. And there is actually a palladium ETF, in case you guys aren't future savvy. Symbol is PALL. It's the Aberdeen Physical Palladium ETF. I don't know how liquid it is because I look at the futures. But if you're looking at palladium as possible investment, because I said I like it, I hope you're not. I really like the way the chart's setting up.
Okay, so I'm long platinum that I have been long for years. It's not been that great of a position. I actually am considering switching over to palladium. Back just to silver for 30 seconds. Anything about silver? So follow gold or follow platinum?
I think silver's more closely related to gold. I think silver's institutional uses are waning, based mostly on palladium and platinum being as good, if not better in some cases. In other senses, it's copper, which you also like a lot, and so do I. But it's just the silver chart is much weaker than the gold chart.
Yeah.
So I want to see gold snap up, and that's likely when I would buy silver, because that gold silver ratio only gets so far apart before mean reverts.
This has been Tradier's Rundown. I'm
Critically acclaimed.
What's that?
Critically acclaimed.
No, everything's going to be critically acclaimed from here on out. So just wait. Just have some patience. This is Tradier's Rundown. I'm Jim Uriel. That's Bob Iacino. We are together the hosts of the critically acclaimed Tradier's The Trader's Edge, which airs live Wednesdays, 3 o'clock Central Time, 4 o'clock Eastern Time. Please join us. Thank you guys for all the support you give us.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.